Ladies and gentlemen, welcome back to the channel. I'm actually very excited to bring you tonight's episode because we're going to talk specifically Tesla stock, what is coming next throughout the next couple of days. What we got today from a technical perspective only looks really good on the broader markets and for Tesla. Very much so for Tesla as well. And a lot of people, may not understand that because Tesla didn't exactly do great relative to the Russell being up over 3% today, including the move higher in after hours. But there's something I must tell you at the onset of this video. What does the Russell have in common with Tesla? Not very much by a pure definition's sake, okay? Russell stocks are typically small cap companies. They're typically less stable companies, more domestic oriented names. Okay? Small caps, in fact, they don't tend to be like bad companies, a lot of them. That's a big misconception. But a lot of small caps tend to be, really good at one thing domestically. Right? There's not a lot of small cap companies that are international companies, okay? So that's different. But the Russell and Tesla have one big thing in common. They tend to be risk-on stocks, okay? Well, some days, if the Russell outperforms, you have to understand this. That is a broader kind of sentiment metric to say higher beta is outperforming. Tesla, even if it did not outperform the markets today, don't be surprised if it does continue to outperform. Tesla has been outperforming over the past couple of days. I mean, let's face it, you were up 3.62%, up almost 1%, then you're up 2.29%, then you were up 3%. We've been outperforming for the past couple of days, right? Now the Russell had its day. But what I get out of this is simply, if the Russell's going to outperform, Tesla is likely to outperform in the days to come. Now, we're going to have some data coming out throughout the rest of this week. We did have some earnings today in after hours. And we have some news that I want to share with you in tonight's episode. Hit that like button, subscribe to the channel if you have not done so already, and ladies and gentlemen, check out that link down below in the description of this video to come join the trading community if you would like to get serious about growing your money. This is not exactly a community that you would want to join if you already have a lot of money. If you already have millions of dollars and it's more about preserving your money, like, the group's probably not for you. We're not going to be investing in McDonald's for, a dividend and a very stable company, okay? We're actively trying to 10x our money, okay? Make a lot of money in layman's terms. By doing that, you have to take on instinctively more risk. But what I've found is if you go out and do the due diligence to find the companies that are trading at a steep discount to their peers for the sole reason because they are under-discovered, over time, you get a correction in that, okay? If one stock has the same characteristics of another, but this stock here is widely known, if you ask any investor, they know about this company, versus the same company doing the same thing, growing at the same growth rate, same balance sheet, blah, 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 but nobody knows about it in the same field, right? Things are the same, but just nobody knows about it, but it's trading at half the valuation or a fourth of the valuation. I think the odds are better, or it's probably less risky to buy this one over here versus the one everyone already knows about, because if everyone knows about it, it's probably already priced in. If nobody knows about it, this guy over here that's unloved and under-owned, you're not pricing in all of that good news, okay? Very simplistic definition here, an example. But that's the kind of work that we are doing. And we have specifically identified multiple different medium-term time horizon opportunities. I'm inviting you to come join. If you would like to, link down below in the description of this video. Remember, when you join on the Patreon, you have to link your Discord to the Patreon or the service will not work. I get a lot of messages, and that's the only thing you have to do once you join, okay? With that said, on to tonight's episode. Okay, now that all of that is out the way, we have to make sure we're all on the same page to why stocks did so well today. Why the S&P hit a new all-time high, and why the Russell went up 3%. And I have to tell you, it wasn't like a total risk on day where some of the high flyers are going up 10, 15%. Like, this wasn't really that kind of day. It was just a lot of stocks participating and going up, is really what it seemed like. Broader participation, at least in the Russell, less so, I would say, for the S&P. Like, stocks in general did pretty well, but there was definitely some outperformance by Apple and by Meta and some of the fan favorites. So what happened today? Beyond some of the other smaller headlines was CPI. CPI actually came pretty much in line with expectations for core. Wasn't a huge, surprise. Headline CPI came in a little bit lower than expected. But the big news was actually in core, month over month. Because why? Jerome Powell on the podium last month said, hey, we've started to see some of the effects of tariff inflation. Fine. Expectations were that we would see more tariff inflation. In fact, in this morning's inflation report, goods inflation came in well lower than anyone was expecting. It was around 0.2%. The month-over-month reading of core came in at 0.32%. So you actually seen goods inflation, which is directly, linked to tariffs, come in way lower than expected. Services came in hotter than expected, which is typically not linked to CPI. And, a lot of the inflation today was also in the housing sector and rents. You also had the White House comment on that. So when you even exclude rents, you really don't have an inflation problem. And that is why stocks did so well, despite what the numbers themselves, look like, because it didn't look like a crazy beat, enough to get the Russell to go up 3%. And I think that's why some people were a little confused to what happened today. So long story short, you don't really have an inflation problem. And that is why the odds of Fed rate cuts also skyrocketed today. I mean, they were already pretty much pricing a cut for September, pricing in a cut for October, but the probabilities for both of these went up around 11% apiece. So about a 10-11% increase in the probability for a September cut and around an 11% increase for the probability of a cut in October. So you're firmly pricing in a Fed cut September and October. December, the odds of another cut are at 49.0%, and the odds of only two cuts at 40.5%. Here's the deal, though. Rate cuts are not uniformly positive, okay? In fact, when the Fed is cutting rates, it's typically not a good time to be in markets, right? Typically, when the Fed is raising rates, it's a good time to be in the markets because in principle, if the Fed is raising rates and you have an inflation problem, you typically have a very strong economy. Earnings are typically coming in good, and the Fed is raising rates to cool down the economy. So in fact, when the Fed is raising rates, historically, it tends to be a good, period to invest, okay? Historically, the best period to invest is once the Fed stops raising rates, but before they really start to cut rates. Why? Because in that environment, the economy is doing okay. They don't need to cut rates to stimulate the economy, and you don't have an inflation problem, okay? The worst time normally to be investing is when the Fed starts to cut. Because normally, when the Fed is cutting, They're trying to protect the economy because there's weakening in the economy, which means downside to earnings, okay? There's anomalies to this, obviously. Like 2022 was not a great market. Fed was raising rates, okay? Not great. Well, what if we get a scenario where the Fed cutting rates actually could be a positive for markets? Because if the reason the Fed is cutting rates is because inflation, from specifically even tariffs, is not coming about, well, that could be a very positive outcome. And that is another kind of added to the bull thesis of why stocks did well today and why you've seen this higher beta, smaller cap outperformance. Now, Tesla specifically, again, it's been outperforming the past couple of days. Hedge funds and institutions have been very bullish on Tesla in aggregate since Tesla's earnings, okay? Today, the stock went up 0.5%, can't really complain all too much, okay? You were up more than that at about $345, $46 per share. You ended up closing at about $340 per share. The low of the day was around $332 per share. What I really liked about today is, one, this trend line that you broke above, put you into a technical, breakout, right? You held that as support today. That looks really good. But you also retraced a lot of the downside that you've seen during the day today, okay? That initial sharp sell-off you had in the beginning of the trading day, buyers came in and bought the stock, okay? And then you were in a pretty solid uptrend throughout the rest of the day once you hit that low of the day today. So you did get quite a bit of demand that came in. And usually when you get these bottom wicks, these really long wicks, here, it tends to be a sign of further upside. If you look at here, for an example, and Tesla dropped 14%. Next day, you were up 4%. Day after that, you were up 4.5%. Day after that, you were up almost 6%. Day after that, you were up 0.1%. A larger bottom wick. Larger bottom wick here, you're up 2 green days in a row. Larger bottom wick here, again, you were up following that as well. Here, larger bottom wick, you went up again, right? Larger bottom wick, you went right up, okay? That's just what I've seen, right? I've tended to notice with Tesla specifically. And it just really means that buyers had control in the beginning of the day. Stock started off doing well. Sellers took over at some point in the day, and then buyers took over again to close out the end of the day, right? Doesn't mean you necessarily went back to a new daily high, but you didn't close even near the lows, okay? That is a sign of strength. Now, we do have some data coming out throughout the rest of this week that is definitely, has the potential to test the markets. Tomorrow, it's going to be a relatively slow day, okay? You're going to have some oil data coming out, mortgage data. None of it's going to be important. Fed Bostic and Fed Goolsbee will speak following the CPI report. Are they bullish? Are they bearish? Obviously, that can move markets a little bit. But Thursday, you get PPI month over month, core PPI, initial jobless claims. Fed Barkin will speak. Okay, some bond auctions. Like mid-tier data. Not really important data, kind of mid-tier. It's not nothing, but is it going to really move the markets too much? Probably not. We're all waiting for Friday's data, August 15th, okay? That is retail sales month over month. That's going to tell us a lot more about the strength of the economy, the strength of the consumer. People spending money out in the economy is like 70-80% of GDP. You need to see people spending money or things get bad quickly. Important to remember. You have Michigan consumer sentiment that will be coming out as well. Across the board, you're expecting numbers to get worse. You're expecting inflation expectations to go up on the 1 and 5 year. So we're already heading into that with low expectations. Odds are you probably come in not as bad as expected. Retail sales, you really don't have high expectations here either. You're expecting a weaker number than you had last month. Last month you were at 0.6%. You're expecting 0.5%. So not like a terrible number, but you're not expecting like a great number either. So I think we're set up in a positive kind of way heading into Friday. What's also going to be happening Friday is the meeting between Trump and Putin. Trump said, I believe it was yesterday during the press conference, that he's going to know if a deal can even be done in the first like 2 minutes. Okay. So I imagine they're going to meet early in the morning. I'm not exactly sure what time it is, probably in the morning sometime. And then we're going to hear something probably like lunchtime. Okay. We're going to start to get the headlines coming out. And I think this has the potential to be a big catalyst, because if Putin and Trump get along and there's like a framework of a deal, you don't have that risk of tariffs being put on China or additional tariffs on India for, buying Russian oil. That threat goes away. Question is, does Zelensky agree to that? If he does, great. Problem solved in Ukraine. If he doesn't, then it's hard to retaliate against Russia if Russia wants to make a deal. Now, Tesla is hilarious. I mean, you got to give it to Tesla. Tesla posted this post on X. It says, point of view, you just bought a car that can't drive itself. It's taking you back to horse and carriage times like 100 plus years ago. Yaman on X says FSD kills, Waymo doesn't. Tesla says long-term hostility and high stress emotional states are linked to a 3 to 5x higher risk of heart attack, stroke, and certain immune-related conditions. Being a hater kills you, Yaman. I love it, dude. This is how a company should be. Like, not taking everything so serious, able, to mess around and give a little back sometime. Now, Tesla just posted a pretty incredible new video as well that I'm sure is gonna, spark some attention here. They posted this video of FSD supervised driving 362 miles from San Francisco to LA without the person in the driver's seat needing to touch the steering wheel once. This was a 7-hour car ride. Like, not just down the road, but a damn, almost road trip that the car just did by itself. Now, in final option activity today from hedge funds and institutions in Tesla, you had 126 different trades totaling $62.81 million with a positive order value of 74%. Now, you had volume to the call side today of about 62% and volume to the put side of 38.24%. So it looked like some very strong numbers. And again, you had 283,000 shares that were covered by hedge funds and institutions. Again, it just goes to show, they're not bearish on Tesla anymore. Not in the way that, a lot of even retail investors are bearish on Tesla these days. Any little opportunity they get, they start to cover. I think partially, what drove us higher from the lows was probably short sellers covering. Probably some of the computers covering, since we are in this now technical breakout to the upside. The odds are that we continue to rally from here. Now, also in the news today, here in After Hours, U.S. Treasury Secretary Bessent says we want to find someone who can revamp the Fed. Bessent says there is a foundational issue at the Fed. Bessent hopes Moran is confirmed for the Fed seat before September, says the Fed should consider 50 basis point rate cut in September, and Trump is open-minded on Fed governor pick. Bessent says that we are solving for several variables with China. He says that he will meet again with Chinese officials in the next 2 or 3 months. Bessent says the Fed could have cut in June if given accurate data. This was a big headline as well. Bessent says we will need to see months, if not a year, of progress on fentanyl flows before Chinese tariffs come down. But they're talking about Chinese tariffs coming down. I mean, you could see how that could be seen as good news. Bessent says he will immediately enjoin if court rules against tariffs. Now, this word enjoin means urge someone to do something, okay? He's basically gonna urge the courts to reverse it, is what I get out of this. But I mean, I honestly don't know if this would be seen as good news or bad news if the court ruled against tariffs. Like on the inflation front, it might be seen as good news, but it's definitely going to hurt the deficit. The fiscal, outlook could help the economic outlook a bit. I still think you're going to get those commitments from companies like Apple. The trend is reshoring. I don't think that's going away. Like, it's kind of hard to say if that headline comes across that the courts have shut down tariffs, if that would actually be seen as good or bad. Instinctively, you would think that would be good, but it could raise uncertainty and create more worries. But I guess we'll see when we see. President says it gets harder and harder for Supreme Court to rule against Trump administration on tariffs given revenues coming in. Now, according to CNN Brazil to unveil measures against U.S. tariffs on August 13th. Fedbarkin says today consumers are feeling somewhat stretched. Fedbarkin says inflation will be more moderate than people think. If I'm thinking of that correct, that means may not see as much inflation than people think. Okay. That could be, a little bit of a flip-flop from another Fed official. Fedbarkin says choosy consumers could blunt inflationary effect of tariffs. So, like, another Fed official is leaning more towards we don't really have an inflation problem. What are your thoughts on all of this down below in the comment section? Again, I just want to say I think today was a win for Tesla stock. It was a win for risk on, which Tesla is risk on. Now, we've been outperforming for the past couple of days, last 4 or 5 days or so for Tesla. I'm not surprised. Hi. I'm not surprised there was a little bit of underperformance today. But I think if we continue with this risk on, Tesla's really going to start to outperform. We have some earnings as well throughout the rest of this week. Nothing too important. Cisco, Red Robin, JD.com, John Deere, Advanced Auto Parts, Birkenstock, right? Nothing too extreme. In the next couple of weeks, we will get NVIDIA earnings and some of our, smaller cap AI companies that are big portions of our portfolios at this point in the trading community, of course. So there's still going to be quite a bit of excitement around earnings. NVIDIA still, that's going to move markets crazy. But, August, kind of a 50-50 month as far as seasonals, if it's going to be weak or not. Could be strong, could be weak. So far, it's looking okay. September tends to be an even worse month. Don't be surprised if September you do get a little bit of pullback correction. I think it will be short-lived. Let me know your thoughts on all of this down below in the comment section. Ladies and gentlemen, hit that like button and subscribe to the channel. Check out the link for the trading community in the description of this video. That is all for tonight's episode. Have a great rest of your night, and I will see you in the next one.